Welcome to DealTalk. I'm Michael Marzec, and today I'm sitting down with Bryan Pearce to talk about how strategic planning can help increase business valuation. Bryan has 40 years of experience advising, guiding, and recognizing innovation-driven, high-growth entrepreneurs. After more than 3 decades as a partner with EY, Bryan now serves as Director of Strategic Business Planning with the accounting and business advisory firm Gray, Gray & Gray. Bryan, welcome to DealTalk.
Thank you, Michael. It's great to be here.
Now, strategic business planning sounds like one of those things that every business should do, but most probably don't. At a very high level, what is it and why is it important?
Sure. Well, let me start with why it's important, Michael. I think, it's been said the world is changing more rapidly than ever before and will never be this slow again. And I think that's probably a great way of looking at it and really sets the context, I think, for the need for business planning. And, innovation is a key part of that. I like to sort of think of, S-curves where you see a business kind of start and go through a period of rapid growth. And then eventually that rapid growth will tail off in virtually every business. And the challenge for a business owner at that point is, how do I make sure that I don't go into decline, but rather innovate and change my business in such a way that I continue to jump onto the next S-curve and continue to grow. And that's really the purpose of strategic business planning, is to make sure that the business does not decline, to make sure that the changes that are happening inside the business, are happening at least as quickly and hopefully more quickly than the changes that are taking place in the marketplace, to make sure that you continue to be relevant. So that's really what, I think the context is for business planning. And it's really an opportunity for the business owner to, look at the strengths and weaknesses of their business, and also the opportunities and some of the competitive threats that are out there, and find ways to, develop strategic initiatives that continue to make that business viable and healthy.
Great. So Gray, Gray & Gray has its own, I guess you call it a proprietary approach to strategic, called the Strategic Business Game Plan. And it's focused on 6 key business drivers. I want to get this right: customer, team, leadership and governance, finance and owner wealth management, M&A, and supply chain. Can you touch on each of those briefly and how they drive business value?
Absolutely. And you did get them right, Michael. Thank you. So, starting with the customer, obviously all business really revolves around the customer. And so, as we look at it, we like to look at, are the customers that the business is serving healthy? Are they growing? Do they appreciate what we are doing for them and have loyalty and customer satisfaction? And how do we measure that and manage that process? And then making sure that we are diversified so that we don't have too many, of our eggs in one basket, as they say, too many customers that have a high percentage of our overall sales volume, too many customers in one industry that may hit a period of a speed bump. And so it's really important to have, growing, satisfied customers that represent a diversified customer base. I think the second one that you mentioned, team, is, absolutely essential on a couple of ways. One is that it's very common for entrepreneurs, when they start a business, to eventually outgrow some of the team that they had when they started that business. And so there is a need to continually look at whether that team needs to be upgraded to scale with the business, or to bring in some experienced people that perhaps have more experience in working in larger growing organizations. It's not to say that you can't find a role for the people that helped you get to where you got to, but they're not always the people that can grow and scale with the business. In this environment where it seems to be so difficult to get people, obviously it's not only about the recruiting, but it's about getting people that you want to stay, and having those, what I call stay interviews with them, to really understand, what's going well and what we could do better. And also continually looking at our compensation strategies, as well as, the flexibility that we offer, whether it's working from home or time off or whatever it might be, to kind of satisfy the current workforce. So team is really important. Leadership and governance, I think we're seeing, a lot of businesses that are coming of age and going through succession issues, or will be over the next 5 years. And so how do they really think about having a strong bench of people that can take over the leadership responsibilities when the current leaders want to retire or exit from the business, and have the right people there that have the ability, as I said earlier, to scale the business and continue to lead the business after the founders or the current leadership team perhaps moves on to the next phase of their lives. Finance and owner wealth management is also related to that, as well as to other things. And I think we're seeing, you mentioned supply chain, I think we're seeing where the pressures on supply chain are causing many companies to have to carry larger inventories and so on. And that obviously requires capital to do so. So having adequate finance to run your business comfortably in these challenging times is certainly an important part. But when we move to owner wealth management, I think we've seen all too many times where owners have kept all of the money basically that they have, in their business, and have failed to diversify their own personal wealth, their own personal assets. And certainly as they contemplate getting ready to perhaps sell the business or divest, they need to make sure that, they've had a period of time running up to that event where they've diversified some of their wealth so that it's not all tied up in the business. And then I guess the final comment would be picking up on the M&A driver and recognizing that growth that we spoke about earlier, to be able to help the companies move from one S-curve to the next, doesn't all have to be organic growth. It can come from inorganic growth, from mergers and acquisitions, and increasingly from strategic partnerships as well, where we may find strategic partners that have great access to customers that we want to enter and that kind of thing, and forming and forging a good relationship with those strategic partners can be very helpful.
So as we think about business value being affected by these, are these sort of levers sort of equal, or how do they play together in terms of trying to figure out which one deserves the most attention?
Well, I don't know that they're all equal for every business. I think it depends on the nature of the business and particularly where, the founder or the CEO has put some of the emphasis. What we often find is if you have a founder or CEO who is a hard-driving salesperson, for example, he or she may have put a lot more emphasis on customer than they have on team or on finance. Likewise, if you have a founder who is a very technical type of person, they may have put too much emphasis on trying to get the product perfect rather than getting it sold. And so, where I like to view it is we need to keep these things in check and in balance so that as the company grows, they're all growing more or less in sync. So if you're growing sales and growing customers, you need to make sure that you have the finance to be able to support that growth, and the team, both from a manufacturing and operations standpoint, as well as a business leadership standpoint, to be able to sustain that growth as well. So otherwise, the ship gets a little creaky, and that can be very difficult for businesses. So I think it's find the right balance and make sure that you're doing these things as much as you can in sync as the business grows.
So how does the CEO get started? You mentioned earlier, you kind of talked about strengths and weaknesses, opportunities and threats. Is that kind of the starting place?
I think that's a great place to start, Michael. And I like to sort of express it as, the challenge for most CEOs and business leaders is finding the time to get out of working in the business and stepping back and working on the business. And I think all too often, CEOs and their teams get caught up in running the business day to day, and it's easy enough to do that. That's what produces immediate returns in many cases. But it is healthy to step back and say, what's happening in my market, what's happening in the business, and look at things like succession and leadership team, use a variety of the analytical tools that are available to you to really understand the business intelligence, if you will, that's available to you that really helps you to understand what's going on in your business, and then develop a list of SWOT, strengths, weaknesses, opportunities, and threats. And based on those opportunities and some of the threats that you might see coming from a competitive standpoint, particularly, begin to develop and execute on a series of strategic initiatives that's going to help you to take that business to the next level.
So as I look down at your list of 6 drivers, they just happen to be crucial topics for us here at Dealmakers. I'd like to delve into a couple of them in a little more detail, talk about how companies can develop initiatives to address the threats, weaknesses, or exploit those strengths and opportunities. We touched on this a little bit. Let's talk about team a little bit more. I mean, given the current labor market, I know this has become an increasingly important key component in deals. Some acquisitions are almost built just on acquiring talent. What are some of the new ways that companies are building stronger teams coming out of COVID?
Well, I think one thing is really having good communications with your key team members and not just assuming that, you understand what's going on or that they understand the direction of the business. So as in always, in business, communications are really critical. And, you hear stories of people that have left a business and the CEO may have said, well, why did that individual leave? And then when they actually have a follow-up interview or question, there was something that could have easily been addressed had it come properly. One of the ways that I see more and more companies addressing that are, kind of forgetting about exit interviews. It's kind of too late at that point to bring somebody back. It's almost like a, postmortem, but rather move to something called a stay interview, where you're asking the employee or the team member what's going well, what could we be doing better, what are your career aspirations, and then try and find ways to really craft the role of that particular team member so that they want to stay rather than asking them why they left. And I think that's a really essential step as we're in this environment. Obviously, compensation is, really in the spotlight right now, and people are able to command a higher premium in many cases if they leave. And so having good communications and an open conversation around compensation is really important. And one of the things that we're seeing companies do is adding in kind of stay bonuses or stay incentives that vest as the employee stays longer with the organization. And so, if you stay, you'll get a payoff down the road, and that seems to be paying off well. And the third thing I would mention is probably around employee ownership in the business. So, this is not a new thing by any means, but I think it is important in many companies to have people stay because they feel they have a, piece of the action and a future and the stake of the business. And, looking more creatively at how you can do that. And obviously that comes with a vesting schedule typically that gets people to stay for at least 3 or 4 years, which hopefully will get us through this, current situation that we're in.
Yeah, so, there's a lot of times people issues, they can be viewed as a little soft or kind of hard to measure. Are there ways that you can think of that are tangible that can help demonstrate, more value for the business?
Well, I think, looking at employee turnover and so on is really important. I was on a call earlier this morning in a potential acquisition situation, and, this company had enjoyed extremely low turnover for a number of years and attributed that to, creating kind of its private company, but it created kind of a family atmosphere, one where there was a lot of respect, a lot of communication. People were encouraged to progress in their roles. So I do think that it does really demonstrate value if you have, people that stay for a period of time, as long as they are good contributors to the business. And as I said, being able to attract talent from, larger companies into a medium-sized company that help it to scale is also going to add value as well. And the company that I sit on the advisory board, we've had very good luck bringing in sort of that next level of management to help the company grow by bringing people in from large brand name businesses that are looking for something where they have the opportunity to contribute and create more value in a more medium-sized environment rather than being a number in a large company. And I think that really appeals to a number of very talented people.
So let's turn to another hot spot, supply chain. And we've heard of deals that have just kind of unraveled because of supply chain issues. I mean, what kind of steps can companies take to kind of secure or build resilience into their supply chain that will then drive business value?
Yeah, no, it's a great question, Michael. And resilience, I think, is a really key word when it comes to dealing with supply chain. I think that again, loyalty is a key ingredient here. So finding those suppliers that you've had and continuing to strengthen the relationships with them and let them know that you will be loyal to them if they can continue to supply you. And obviously, the companies that are our suppliers are part of our supply chain are going through many of the same challenges that we are. So finding ways to collaborate and work together is important. Good communication so that they really understand what your needs are, what your timelines are, and so on can be helpful. But there will be times where, the suppliers we've dealt with for many years perhaps cannot continue to meet our demands. And so it is essential that companies are evaluating that and where there are shortages anticipated, being able to find alternative sources of supply and suppliers who can, be responsive to changes in demand that are difficult perhaps for us to predict. One of the ways that some companies are doing that, depending on the nature of their business, is looking to move things back, near shore or onshore rather than offshoring into Asia, for example. That's one technique that's being used. And again, it depends on the type of the business. But I think it's really about resilience and finding people who can supply and having more than one of them if you need to, so that you're never caught short. The other thing that we're seeing, really impacting from supply chain is that the companies that are dealing with the supply chain, in many cases, are having to increase the levels of inventory that they're carrying of raw materials and finished goods that are being contract manufactured for them and so on. And so that has both a limitation in terms of the amount of space and the risk of carrying inventory versus not carrying inventory, but it also has a financial implication because you need to make sure that you do have the funding available to support those higher levels of inventory. But that may be an essential part of addressing the supply chain, is just making sure that you have more stock on hand because of the limitations in getting product made by a supplier, and also if it's coming from overseas, some of the challenges that we've seen with logistics and just getting stuff on the boat and off the boat when it lands here in North America.
So something we hear about regularly at the deal makers conferences is business owners who have not done proper, wealth management heading into a transaction. How does that fit into the strategic business planning process, and again, how can that help from a valuation standpoint?
Yeah, again, another very important aspect, Michael. And I think wealth management doesn't just mean where am I investing my money. It really encompasses looking at tax planning as well, looking at how do I take this asset that I've built up in my business and make sure that I've properly structured my tax planning around it, that I've been able to reward the employees that deserve to be rewarded as part of the transaction. How do I deal with family members who maybe are going to either continue on in some capacity in the business, or who I wish to begin to pass wealth along to? So it's a very all-encompassing thing around not only wealth management, but tax planning, estate planning, and so on. And it's very difficult to do that at the 11th hour. So the time to do it is now, while you're contemplating perhaps a sale of the business, even in 3 or 4 years or more, where you have the opportunity to do it and do it at a leisurely pace so that it can be done properly, and thinking about other things like where do you want to retire and live, and making sure that the tax planning and the estate planning is done in those kind of jurisdictions, as well as where you may be living today. So a lot to it, and it can make a big difference, not necessarily in the value of the company that you sell, but certainly in how much you as the good guys or good gals get to keep out of those proceeds.
Well, Bryan, the time has flown by. I can't believe we're kind of at the end of this, but I really want to thank you for joining me today on DealTalk to kind of give some of your insights into strategic business planning and how that can drive value for a business.
My pleasure, Michael, and happy to assist with any of your listeners.